Greetings, members, one and all of the Salivation Nation. Silver refuses to move. Despite this, let's explore. If you are like me, you are frustrated with silver's price performance over the past year, and definitely this year too. It's not done very well in terms of its spot price, but we understand that there is a separation between the paper markets and the physical markets, and that is going to be illustrated with what I'm about to share with you right now, and that should lead to you being either A, more frustrated, or B, encouraged, because you know that there's a separate market for physical silver. I'm going to talk a little bit about that, and also with the understanding that the physical market for silver is still reliant to a degree on the spot price. That's the paper price. Let's take a look at this. First, we're going to look at the prices for gold and silver as I record this video, because what I'm going to be referencing happened a few days ago. I wanted to kind of let it absorb a little bit to see if there's any movement in the upwards direction for silver. Didn't happen. In fact, all of the metals are down today, save for rhodium, which kind of woke up with a $50 increase, still just under a third of a percentage point. But silver's down over a percentage point as I record this video. Certainly enough ample time for what has happened to absorb itself into the market. So let's talk about it here. The reference an article here from Nasdaq.com. The iShares Silver Trust experiences a big inflow. It was one of you who pointed this out to me when it happened. Maybe perceived that it could have been one of the big banks, maybe the Bank of America. And I covered this in a previous story too, when we talked about a huge inflow into the COMEX or into the silver futures markets as well. Had no effect. It's crazy. It's insane. One would think that it would, and perhaps maybe it will if it continues to happen at a pace, but I don't know. So far, it's not had much of an effect. But looking today, and again, this was published a couple of days ago, week-over-week shares, outstanding changes among the universe of ETFs covered at ETF Channel. One standout is the iShares Silver Trust. That's the SLV. That's the custodian of JP Morgan, where they have detected an approximate $161.5 million inflow. That's a 1.4% increase week over week in outstanding units, from 570,750,000 to 578,550,000. The chart below shows the one-year price performance of SLV versus its 200-day moving average. And you can see how it's kind of moved up, and it is down. And you can see the moving average is trending downwards. So it is seemingly doesn't have much of an effect. And in the article, it may give us a clue or hint as to why. Looking at the chart, SLV's low point in its 52-week range is $19.80 per share, with $27.98 as the 52-week high point. That compares with the last trade of $20.78. Comparing the most recent share price to the 200-day moving average can also be a useful technical analysis technique. And, we really don't get into technical analysis here. We kind of look at the fundamentals and the other drivers of price, which is psychology. I believe that is the greatest effect on the price of gold and silver. And a lot of that isn't logical, really. It's just about the sentiment, the mood of the markets. Volatility, that's why the volatility index is there, by the way. So this may give us a little bit of clue as to why silver refuses to move. Exchange-traded funds trade just like stocks. But instead of shares, investors are actually buying and selling units. These units can be traded back and forth, just like stocks, but can also be created or destroyed to accommodate investor demand. Well, isn't that nice? if we could only destroy and create silver and gold in the physical form to accommodate investor demand. Yeah, I don't think that's going to happen. There's no way I'm destroying this silver maple leaf, by the way, that I'm flipping in my hand right now. I'm not going to destroy it at the whim of investors or creators or investors out there. And by the way, I can't just create this silver maple out of thin air either. It's physical. It is solid. It is in my hand. And so creation of new units will mean the underlying holdings of the ETF need to be purchased, while destruction of units involves selling underlying holdings, so large inflows can also impact the individual components held within the ETFs. Well, so far it's not having much of an effect on price because, well, except maybe it's having an effect where it's dropping, but I think there's other avenues or reasons why that's the case. So here's the issue, folks. Here's the quandary. Silver and gold ETFs, they are not tied to the physical bullion, especially the SLV. It's pretty much a widespread knowledge that that's the case. All it is a convenient way for people who invest in shares of stocks to be able to hedge themselves from within their platforms. So in other words, if you're on Robinhood or some other trading application, E-Trade or TD America House, or whatever those Waterhouse or whatever those trading platforms are, Charles Schwab, well, you can trade stocks, and if you want to diversify and to hedge with some of the commodities, well, you just go to those commodities ETFs who that don't necessarily represent, don't have anything backing them up, and so therefore you can just buy them and follow, and they're the only thing that's tied to the ETFs is the spot price for gold and silver. And so silver spot price right now is $22.47, and the ask price. You will be able to buy a, well, it's not a share, I guess it is a unit of silver, which represents some representation of an ounce or a fraction of an ounce, or what have you, for based off of the spot price, with a very small premium for the trade. And that small premium, by the way, is much less than it would be if you were to buy a silver maple, or even more importantly, the most common, most popular silver bullion coin, the Silver Eagle. The Silver Eagle, you buy that, you're going to be paying quite a bit of a premium, an unusually large premium for this Silver Eagle. Silver maple, it's a little bit less. Well, it's considerably less to get a silver maple these days. Both of them silver. Both of them do have a substantial premium above spot price. So that would mean that buying the SLV may be an attractive option, especially for the convenience and the liquidity. Liquidate those stocks. You don't have to worry about taking and hauling your silver in a bag or in tubes or even in flips to your local coin shop to cash out, where you will not get much of that premium back, which means that you may have to wait a while in order to come out, break ahead, or break even, or get ahead on your purchase there. And so there is a drawback to having physical. Nonetheless, this is an option for convenience, but the convenience is cashing out literally into cold hard cash, fiat currency, or representation of currency in your bank account. And so that is the idea behind these ETFs. So they can create and destroy them on a whim based off of the demand or lack thereof, buying and selling. That's the beauty of it. But it is not silver. It is something that's tied to the price of silver only. That's it. And I'm not against people who buy ETFs. If you're heavily invested in the stock market and want to, out of convenience, hedge, I think that's certainly one way to go. However, if it were me, I would certainly buy PSLV because that is actually backed by the physical units, by the physical. It is tied in and accounted for. So there's that. And even as such, I would still, even if I was investing in that world of ETFs, I would find my way to having some physical in hand. It's always a good idea to have some physical. It's worth the premium to have a little bit of physical in your possession. Now, Physical silver is a separate entity and a separate marketplace to a degree. It is still tied to the spot price. Hence why there's such high premiums for certain silver coins. The ones that are heavily in demand, like the Silver Eagle, very heavily in demand, is going to be a much higher price than, say, a Britannia or Silver Maple or any other silver bullion coin, or round or bar for that matter. You can be paying much less, but there's still a premium tied to those. And that premium is derived and based on the spot price. And of course, as you know, because of inflation and because of the manufacturing process of silver products, well, there is premiums that are, people think of, there's just one price, one premium. It's spot price and then whatever the premium is. And many people think that the bullion dealers get that entire premium. They do not. They get a fraction of that premium. And by the way, it's a very small fraction. They make their money on volume. It is typically during the manufacturing process, brokers and other entities that are involved that get their cut of that premium. That's how it works, folks. But nonetheless, the problem is you are footing the bill for that. But it is certainly based off a spot price, because the price of these products will go down if the spot price goes down. Yea, though, and admittedly, they don't follow at a direct ratio on the way down as they do on the way up. On the way up, they may keep that ratio and climb. So in other words, let's say silver is $22 an ounce, and there's a $10 premium on Silver Eagles. You're going to be paying $32 an ounce. But if it drops down to $20 an ounce, you may not be paying $30 an ounce. You may be paying $30.90 an ounce or $31 an ounce. That's the kind of thing that happens typically, as we've noticed. But it is still tied to the spot price on some level. But that separation is noted when you go to buy your bullion, but also when you go to sell your bullion. But really the point of this video is not necessarily that, but that is certainly a part of it, and that is that silver refuses to move in spite of this, because the iShares SLV is a huge derivative market, and it's just an inflow of more people buying it, and because it's not really tied to anything that has any value other than the spot price of silver, it's less likely that it's going to move silver's price. At least that's how I interpret it, because there's nothing restricting it. There is no restraints on it, just like there's no restraints on our currency. And what happens with our currency, the more of these that are printed, the lesser value they have. And we've seen that in effect here with inflation that we're witnessing now. And I believe in this sense, the inflow of extra $161.5 million with a 1.4% increase of these units, whatever measure they are, of paper silver, you have an inflation of that, which means that the SLV is essentially kind of worth less because it's not really pushing that price up. Many people think it should. So, and as you can see here is a market showing SLV down. Look at that, 20.71 cents per share. So that's less than an ounce, I assume, if it's based off a spot price. So very interesting indeed. Just thought I'd share this little news with you, and saw this article and thought it was interesting, especially how they define this and experiencing creation and destruction of these units. Let me know what your thoughts are in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.